Harjit's asking, Oliver, is the Bitcoin run over? Not even close. I do not believe that the Bitcoin run is over. I believe that we're experiencing what is normally historically an historical pause that is cyclical in nature, that tends to happen around this time in the 4-year cycle. Bitcoin runs 3 years out of 4 years. It has typically 1 year of a bear market. And the third year of its bullish run is typically its most astronomical year. That was not the case last cycle, but all the other cycles it was the case. So last cycle was the 2020 cycle was the exception. I do not believe that we're going to have that exception repeat itself. I believe that 2025 is probably going to be, or has the potential to be, the most dynamic year of this 4-year cycle. 2025 will end, if history's any guide, it will end the Bitcoin bull run late 2025, and we will move into 2026, which is slated to be sort of like the bear market. I don't believe that Bitcoin's bear markets are going to be anything like the prior ones, because Bitcoin is experiencing things this cycle that it has never had in its existence. It's experiencing institutional adoption. It has spot Bitcoin ETFs. It has FASB rule changes, no longer making it punitive for publicly traded companies to hold Bitcoin on the balance sheet. It has pensions funds adopting Bitcoin. It has nation states starting to mine and adopt Bitcoin policy. We have talk in the United States of a Bitcoin strategic reserve. We have so many things this cycle that no other cycle in the past has had. And without all of these things, Bitcoin was the most and was the best performing asset the world has ever known. And so with these things, I can't imagine it being less. So I still think there's quite a bit of upside potential in front of us before there's a top that will lead us into the next cycle. That's my story, and I'm sticking to it. All right. Gold is outperforming all other assets. What's your view on gold, sir? That's not entirely true. It depends on what your time frame is. If your time frame is minutes, or if it's weeks or months, maybe. But if it's any decent, significant period of time, gold is a vast underperformer as far as other assets are concerned. Gold can't even really touch the NASDAQ. It can't touch the S&P 500. It can't possibly even come close to touching the NASDAQ. And Bitcoin, let's not even put those two in the same category, because Bitcoin is so far ahead of all of those assets that it's almost unfair to put it in the same category. It's a different species. It lives on a different planet. It lives in a different realm. And it's unfair to put anything next to it because it's just so freaking embarrassing. But when it comes to the other financial assets, if we remove Bitcoin, gold really is extraordinarily poor when it comes to almost every other financial asset. Now, I'm talking over extended periods of time. If you're talking over the last several months, okay, I get it. But historically, gold does perform first and passes the baton to Bitcoin. And so whatever gold, if it has these brief periods of impressive behavior, that is the initial move. That gold, being the analog or ancient form of a store of value, it passes its baton to the future, which is Bitcoin. And then Bitcoin takes the baton from gold and really embarrasses whatever gold did prior to that. And if you were to go back throughout history, you'll see gold moves first, Bitcoin moves second. It's almost as if the parent passes the baton to the child and say, now you go show the world what I'm a little too old to do right now. Sam says, I don't know much about Bitcoin, but Oliver says, get in now. Yes, and stay in, not just get in for a trade. You stay in. This is the future. This is what you need. This is freedom. Just trust me. I've been in the financial markets, guys, for 43 years, going on 44 years. In fact, this month makes 44 years. That's crazy. The 23rd, I'm sorry, March 23rd makes 44 years. Now, that's counting the idiot years. It's 38 years as a professional since my first real professional job on Wall Street in 1986. But if you count all the idiot years before that, learning, falling, failing, being depressed, losing constantly, those years, if you count all of those years, it's 44 years starting from March 23rd. It's crazy. And so what my point in saying that, guys, was that I've been in this industry a very long time, and I've never come across an asymmetric bet as powerful as this one. And I have come across quite a few, but nothing compares to this one, Bitcoin. Just there's a mantra in the Bitcoin community: don't trust, verify. If you don't have time to verify and you find my 43 years of any significance, trust me for now until you verify. If you can't do that, then verify and do it quickly. I'm telling you, I've been pounding the table on this since 2019 into 2020. I've been right, and I'm still right. All right. Can I say a word or two about Bitcoin miners' potential for massive upside potential? I'm just, I'm not a mega bull on Bitcoin miners. I believe that they have a place. I think that their place actually is more valuable when Bitcoin is going through its bear market cycle. I think that they can be a phenomenal tool for hedging your core Bitcoin position by playing the miner short while you continue to hold your Bitcoin long. You never sell that. I'm just not. Beyond a cyclical period, miners have just historically never been a long-term play. They're plays that you come into and out of during their most bullish periods of the cycle, because miners have historically never held on to their illustrious gains. They can have illustrious gains, but it's in a relatively short period of time. And I think that if I'm right, I think that most people who are playing miners for a long-term life-changing play, they're going to be disappointed. Mining becomes exponentially more difficult every 4 years. It will continue to be so. It's not the most viable business. We need them, but it's not the most viable business for a long-term hold. I'm not very bullish on them for a long-term play. There is no better long-term play than Bitcoin. You're not going to get that. And I don't think that for the rest of your lifetimes, you'll see a better long-term play than Bitcoin. That's my feeling. That's my belief. I'm sticking with it. There are some cyclical plays. The miners are cyclical. Even I think MicroStrategy is cyclical. It's not your ultimate long-term play. I don't think that anything is going to outperform Bitcoin. A lot of people get caught up, guys, by these periods where one thing completely trounces Bitcoin or in everything else. And they're allured by this temporary flashing of lights. But at the end of 5 years and 10 years, if you weigh them, nothing comes close. And you've got to look at it that way. You can't let the small pockets of time fool you into marrying those things forever. The only thing that you marry forever is Bitcoin. That's the only thing that's freedom. That's my view. Do you think we're at the beginning of a market crash? I've heard a lot of voices warning this. I know you've spoken on it before. Thank you for your wisdom. So, look, my last master class, and if you have not watched this, you should. My last master class was held in December. I think it was the beginning of December or the latter part of November. I think it was the latter part of November, right? So it was right before our Black Friday thing. And what was the topic of that? Does anybody remember? My whole master class was preparing you on to be prepared for and to be able to take advantage of the upcoming 2025 crash. So when you say, do I think that we're going to have a crash? I actually did a whole event preparing you before this year, telling you that I believe that we will experience a crash this year. So that is not to say that I am 100% sure about that, but I'm certain enough about it to dedicate a whole giant event to it. And just in case I'm right, I want you prepared. So you need to take that event in. It's right here. It's free. You just go. Holy, I just saw Bitcoin at 90, almost 91. It said at 97. Whoa, what a big giant drop all of a sudden. That's crazy. You guys see that? Wow. Sharp drop. I think I'm going to pick some up here. Yes. Why not? I love to buy on these drops like this, guys. I love to do it. But that was such a sharp drop. I don't know. Can you see this? I don't know if you can see that. I think you can. Boom. I'm going to do a quick little 5K little stack here. Okay. Let's just do it. There you go. Boom. You see it? Lining it up. 5K. You see it? All right, let's do it. Boom. Boom. There you go. 5K. Bought the dip. Bought the dip. Shu says, I lost thousands with long call options on Mara and HUD 8 over the last 8 months. Yeah. Tough business. You got to play them in the bear market. If you stay close to me, we'll do it. We're going to do it right. I'm going to have my traders and my Bitcoiners. When the bear market comes, we're not going to need to sell our Bitcoin. We're actually going to make more than the loss from the bear drop in the leverage plays with the miners, with MicroStrategy and several other strategies using the futures market. So a lot of people think that, oh, well, if I hold on in the bear market, I'll lose. No, there are ways to actually turn a bear market into a faster money producer if you know what you're doing. So we're going to try our very best to do that this upcoming bear market. So it's going to be interesting. I'm excited about that too. OV, I'm graduating college in May. Oh, congratulations. And I'll be entering the workforce. My true passion is day trading. Though, how did you balance these two things, career building and trading? Well, that's actually a good question. When I started trading in the early 1980s, it was a completely different world. It wasn't digital. It wasn't online in any way. If you wanted to work in the business, you had to get hired by a professional firm on Wall Street. It was very different. Today, your opportunities have mushroomed. You have more of an opportunity to try to do this instead of working or to do this in lieu of working. I did not have that luxury. I had to choose work or try my hand at professional trading. Today, you don't have to do that. You can work and try your hand at professional trading. How? It's online. It's with a laptop. If you've got 20 minutes a day, if you can find a way to carve out 20 minutes of that trading day, if you trade equities, especially at the open, you can do this. If you can't do it at the open, you grab the last 20 minutes of the trading day. You have ways of maintaining your life with a job while you build your skill. You've got 24-hour trading in the Forex market today. These are things that they weren't possible when I first started, and I wish they were. I believe that my hardship wouldn't have been so hard. I'm always telling the people that say, Oliver, man, I wish I started much earlier. I wish I started when you started. And I'm like, no, you don't. You are actually operating at the best time, at the best moment in all of history. You've got the best technology. You've got the best computers. You've got internet access. You can be at this job, at this activity anywhere on planet Earth with a laptop computer and internet connection, and you don't have to give up your job. What? You don't have to disrupt your life and go through the hardships I went through. Like, there is no better time. We did not have it better, people. You have it better. It's just the opposite. You have it better. There are times where I wish these times existed when I started. I wish I started now. I would suggest that you find a way, you establish your career, try to do something that you enjoy so that you don't hate leaving trading and going to it. The best thing to do is try to carve out 20 minutes or so, 20 minutes at the open, negotiate that. I need 20 minutes. Can I start my work day there? And I don't know where you live in the world, so it depends on where you live in the world. I'm speaking from a USA point of view, but if you're on the West Coast, you can do this, especially without any permission. If you're on the East Coast in the United States and your job starts at 9, but the market opens at 9:30, see if you can try to get 20 minutes off the open. If not, try to get 20 minutes at the end of the day. All right. Those are the two best pockets of time to trade. If you can't do that, then you want to consider trading the futures. I mean, the currency markets, which are 24 hours after work hours, or hours before your work starts. Then the best time to trade the Forex. You have options today, and it's a very beautiful thing. When do I think the bear market starts? I think this is a tricky question because nobody really knows, just so you know. So you're asking me something I don't know, but that doesn't mean I can't give you what I feel or what I think, right? But just understand that nobody knows. If I were a betting man, I would guess that we are going to see somewhat of a scary drop in the markets, but this drop is going to be gobbled up faster than you can say boo. And that drop is going to lead to a mega run to the upside, one that probably takes markets to all-time new highs, and in the most ferocious way, in a ferocious way not seen in a very long time. I think that the major top comes from that run. So I think there's a drop, and I think the drop is scary, but I don't think it's the ultimate one. I think that the drop that I'm thinking happens actually sets the market up to go on a rip-roaring tear that convinces everyone in the world, practically, that there are no more drops, that there is nothing more to be concerned about. And that's what sets up the mega one. I think there's one more major run to the upside. And I think that all those who are talking gloom and doom, they're going to get freaking fried because they're going to feel that they're right on that first drop. They're going to double and triple down on them being right on that first drop. And then they're all going to get completely obliterated by one of the most ferocious bull surges in history. And it's going to take everybody by surprise. It's going to kill everybody who was bearish. And then after all the bears are dead and all the bulls are fat and lazy, that's when the real trouble comes. Markets have this way, right, of just killing everybody. Like, all right, we'll get you on this turn, and then don't think, oh, don't celebrate long because I'm coming for you too. Markets have this way of killing you both, and only a very small percentage of people get both of those things right. Let's see if I'm right on this. Okay, let's see if I'm right on this. Remember this talk. Remember my explanation here. That's what I think is going to happen. Sir, can you please make a video? What are some of the things that can help you identify a bear market start? Such as the rise in bonds and so forth and so on. I believe that the clearest way to determine that you are approaching bear market possibilities is technical. I think that the data points on the fundamental side are so broad and so myriad in nature. Like there's like 150 of these things, these fundamental things, right? Technicals are sharper than that, more precise than that. So as an example, like you can be right on some of the fundamental things that have historically led to major downdrafts in the market, right? Fundamental things can be right, but they're right so broadly that it might be 3 years before you see it. And yet, when you look back in the past, these fundamental signals did trigger that possibility, but it was 3 years early or 2 years early. Technicals are sharper than that. And so I just think, I use space. I use the concept of space, dual space, time, distance from your items getting a certain standard deviation away from all of your key moving averages. And then you need mega bearish events. A lot of people think that you need to anticipate a bear market. You do not. You need to be able to identify the start of a bear market. And if the start, which is usually kicked off by something so violent, so powerful, so treacherous, if the start of it happens in the right location, with the right space, with the right time and duration in the move up, that is when you can start betting on a prolonged move to the downside. The thing you have to understand is very psychological almost in nature. It's not even technicals are the way we put our finger on the psychological dynamics behind the markets. But it's really psychology, and it's basic psychology. Think about what creates or kicks off a prolonged bear market run. It is when almost everyone is long. You can't have a bear market drop if 20% of your participants are on the sideline. Where's the selling going to come from? Where's the exiting going to come from? You need a prolonged, that's the time aspect. So when I say we need space and time, we need time. We need a long enough run to the upside where all your bears relent and start joining the long side. Your longs say there's no other position to play but long. Look at this thing, it just keeps going up. And so you need this market over a period of time to just get so many people committed over time. And the move up so big that it now has space between all of your key things, your 200, your 20. So time and space. Look at my videos when I talk about these things, right? When you get that time and space technical spread, that 3-finger spread, right? Over time. And then something cracks from there. That's akin to someone yelling fire in a crowded theater. When every seat is packed and there's standing room only in the theater, there's no more seats available. There's only people standing in the aisles, standing in the back, watching the movie play out, watching the bull movie. And someone yells fire, and the little door that opens can't possibly fit everyone out of the theater. So everyone's trying to get out of the theater in this little door, and there's not enough space to get everybody out. That's what kicks off a bear market. But if your theater is 20% full and there's a market drop, that market drop's going to be short-lived because there's not that many people that need to sell. So this is why markets climb a wall of worry. It is why when most people are bearish, you can't get a bear market because that means they're not in. You can only get a bear market when almost everybody's in and needs to unwind their position. And that takes time. Why does it take time for 2,000 people in a big giant theater to get out of a small door? Well, that's obvious. The door's small and there's so many people. So it takes a lot of time for people to unwind their theater position. The door's little, the people are many. If the door's little and the people are little, you still can't get a prolonged bear market. So when you tell me a lot of people are calling for a bear market, that's when you know that can't happen. They're not in the theater watching the movie. They're all outside of theater already, right? You can't get a prolonged bear market until everybody's in the theater. Do you understand what I'm saying, guys? That's when you can get a crack, you can get a pullback, you can get a shakeup, but it's not long-lived unless everyone's in the theater. Tell me you understand this. Let me know. You can't get a major extended bear unless everybody's long. It's not going to happen. Mask is asking me how many Bitcoins do I have? Like, I'm going to really answer that. Are you serious? Come on, man. Nobody should answer that. Whoa, I'm going to try to, this Bitcoin dropping here. I'm going to try to, when was the last, where did I buy that last one? Where did I buy that last one? At 87, and we're now at 86. Oh, okay. I think I bought that at 86, right? At 87. Oh, well, I think we can do it again. There we go. Let's do it again. There you go. Boom. 5,000. Boom. Let's do it. Boom. Aha. Strike. I love it. Come on. Did I press it right? Now that one was at 86.3. The other one was at 87.3. I like to do it every $1,000 down. All right, guys. Stack harder. Stay close to me. We're going to get through this together, and we'll have a lot of fun doing it.